Hello, welcome to WFNY Radio, the station created to start a financial evolution in your mind and pocket. Thanks for joining the Real Estate Regroup Show. I am your host, LJ Walker, a real estate investor presenting information that will shift your thinking on how you can own a home or invest in one. Today, the episode will be regarding insurance. Since I am currently in the market looking and comparing different insurance companies, I figured I would share my findings with you. I realize that some people are not too fond of insurance, but believe me, many banks will not give you a loan unless you have one. Also, as some of you know, I was a member of the Real Estate Investors Association. Well, one of my colleagues in the association, he owned a 40-unit apartment building that later burned down to the ground. One of the tenants was a drug dealer, and he was mixing some sort of chemicals together. So please do not risk passing insurance by, even if the mortgage is paid up, especially when you live or when you own a multi-family complex, when your home is attached to another home, or when you know that there may be certain people in your home that's not always in tune with their surroundings and may be careless or what have you, and you may have a fire. Now, in choosing insurance, there are two places you can check with Standards & Poor's or the State Department of Insurance and look at their company ratings. When evaluating them after you go to those places, you want to look into guaranteed replacement coverage. And what that is that if the damage exceeds the limits on the policy, the insurance will replace or rebuild the property without deduction or depreciation. Next, you have umbrella insurance, which I've noticed a lot of people recommending. It covers a higher limit, higher than the claims relative to the home and auto. Well, it is a pretty good product. The only thing is if you decide to go into business for yourself and you set up an LLC, the umbrella insurance lets the lawyers know that you have a home and you have a car. So it pierces the corporate veil. Next, liability insurance. This is also optional, and it basically covers if someone falls on your property. You should also not only get liability insurance in your name, but you should also have it in your company's name, if you have an LLC, that is. Next, you have personal property replacement insurance. This is also optional to add on for the home insurance for high-ticketed items that you may have. You have also the all-peril deductible, which is for stolen laptops, anything from stolen laptops to bursted pipes. And then you have the actual cash value, what it costs before being destroyed but not replaced. Also, if you go back to the episode in which I talk about being sick, you also know that there is insurance to cover you in case you become sick, unemployed, or underemployed. It will pay for your mortgage. And there's also another feature which, if you die all of a sudden, the insurance will pay your mortgage. And this is good if you have small children who cannot work for themselves. You're a single parent and the other parent is not around, and maybe you have limited resources as far as who will take care of the kids in case you die. So those are the options that you should think about. Next on the line is this: flooding, earthquake, mudslides, mold infestations, wear and tear, nuclear reaction, and the government action is normally not covered under insurances. You may have to take out special coverage or an add-on coverage in order to protect you against those. But I would only do that when it comes to areas that are prone to it. Now, I know that the weather is changing and people are experiencing things that they've never experienced before, but I still say don't get these add-ons if it's something that hardly ever occurs. Like, for example, New York, we have had earthquakes, but we don't have them often. They come I think I've only experienced 3 of them since I've been alive. The other thing you may want to do is you may want to think about raising your deductible from $500 to $1,000 in order to be covered well. You also want to ask for rebates. Most insurance companies give you a rebate if you have an alarm system, a smoke detector, deadbolt locks, iron gates, fireproof walls. If your home is a brand new home or less than 10 years old, you normally get 20% off the actual cost of insurance. The only other times when it may be cheap is if you had redone the electrical for the whole entire home. Now, as far as renters are concerned, there have been some landlords in some states that are requiring you to have renter's insurance. And here's why I think it's a good idea to have it, even if your landlord does not require you to. The landlord's insurance only covers the perimeter of the building and his contents. It does not cover your TV and your sofa and dining table and bed. It does not cover that. The landlord's insurance only covers the building and the landlord's furniture if he or she decides to go that way. Now, let me tell you this: a bad credit score will give you a bad insurance premium. Insurance will drop. Insurance companies will drop you if you exceed more than what you put in. If you are dropped, there is something called fair planes, and you can go to http://www.iii.org/abide for more information. You will be paying a higher premium than anyone else, just so you know. Other reasons why they'll throw you off is if they see you too risky, you've had multiple claims in the past with another insurance company, you have pets, you have not paid, and you have prior insurance loss. Another thing that insurance companies look at when determining how much you should pay is the construction or type of your home and how far away you are from a fire hydrant, whether you smoke, and whether you're retired. Now, be careful what you put on social media. Some insurance companies may not cover you if you give too much details about your whereabouts. The insurance companies I had before told me that if I posted while I was on vacation and then got robbed, they would only cover the outside of the house, but they wouldn't cover the contents of my house. So if the thief broke a window, they'll replace my window, but they would not replace my TV. In one forum, and I mentioned this in a previous video, this lady from England, she was saying that we should never post our vacation photos on Facebook because they may cancel our account. Well, that's not true here in the United States, but I did further research and it is true in England. So, any of my English listeners out there, just be careful and be mindful of what you put there. What many American companies have been doing, though, is if you put a photo up and there's a geotag, then they'll say that the robbery is due to your negligence. If they see that you're smoking in one of your pictures, and if they see that you have a pet in one of your pictures, your policy will be canceled immediately. Now, they don't just go to everyone's Facebook page. What they normally do is there may be some sort of suspicion that about you that they had. So that's why they go on social media, to follow you, to see what it is that you are doing. Okay? Now, the next thing is a little controversial, and I know a lot of people are going to disagree. Should you have insurance if you are doing a flip or gut rehab? It would be good if you did. There is a company called Simply Safe that will assist you with that. However, unfortunately, their cameras and security system is no longer transferable to another house. And if the gut rehab or fix and flip you have doesn't have electricity, it's going to be a problem to use that or any other alarm system that's out there. You could, of course, use a MiFi, but if you use a MiFi, that's going to be expensive, and even that doesn't bring power to the device. So I'm not sure about hooking it up to a generator, but so far that's what you're looking at. What I do know is that people have put or hired men to stay in property so that the property does not get robbed. And I know firsthand because why? My cousin is doing it. Well, he was doing it for a number of years because, as many of you know, he worked at Chase, and they had a lot of foreclosed properties back in 2008 and 2009. They had let him go, and he took the job. He actually created the job of staying inside foreclosed homes so that they wouldn't be broken into or vandalized any further. Well, folks, that's all I have for you tonight. Remember, each one reach one, teach one. Bye for now. Have a good night.